And if we see sub 4% interest rates, I fully expect the property market to just shoot up. Hello and welcome back to another video. I hope you are all doing well. In this video, I'm going to look at the latest property market data and answer the question, is the UK property market going to crash? Or are all the property bears and landlord haters who are sitting on the edge of their seats holding their breath, hoping for a crash, all going to be thoroughly disappointed? Make sure that you watch to the end because the answer might actually surprise you. Now, before we get into all that juicy property market data, don't forget to give this video a like and of course subscribe to the channel if you have not done so already. I also have a goal of reaching that coveted 1,000 subscriber level in the next few months, which is going to be tough, but I reckon together we can make that happen. So thank you in advance for subscribing and liking this video. Now let's get into it. According to Halifax, UK house prices actually rose for the second consecutive month in November. Can you believe it? This happened despite mortgage rates being at their highest level since 2002 and a rather nervous economy in general. Now, according to Halifax, house prices rose 0.5% between October and November. This follows a 1.2% increase the previous month, meaning the average UK house price now sits at £283,615, just 1% down from November 2022. However, house prices are in fact still £44,000 more than they were in January of 2020. So over the last 12 months, prices had been steadily decreasing, fueling the fire that we're going to see a huge house price crash. But the figures we have seen released over the last couple of weeks actually suggest that prices and activity are stabilising. We also have the Bank of England releasing data that shows mortgage approvals increased more than expected to a 3-month high in October 2023. Now, all of this begs the question, why are prices rising despite high interest rates? Now, it's hard to say with certainty, of course, but it's my belief that this is because of a shortage in available properties, more so than an influx in buyer demand. Remember, property is largely a supply and demand industry. There has also been a potential increase in buyer confidence thanks to the news that interest rates are beginning to ease. The Bank of England Monetary Policy Committee, try saying that quickly, have chosen to hold interest rates at 5.25% in its previous 2 meetings, bringing to an end the 14 consecutive increases that started from an all-time low of 0.1%. This steadying in rates is causing the market to price in that rates will begin to fall from the middle of next year. Now, even though there is a lot of what appears to be good news in the property market, it's not all sunshine and roses. Just a quick interruption. I have recently released a new newsletter called Business Bites. Every month you will get a short bite-sized email from me with something to do with the latest property market news, updates on my buy-to-lets, tips for you to get started with your first buy-to-let, or anything else business related that I learned that month. The idea is to give you something actionable every single month and we can all grow together. So if you're interested, head down to the link below and subscribe to that newsletter. Okay, introduction over. Let's get back to the video. Industry data shows that there was 12,244 price reductions last week, continuing the significant drop over the last few weeks, with the 2023 running weekly average being 20,014 per week. There's also been a slight drop in the average asking price of properties sold subject to contract. The average asking price of properties selling last week was £351,568. Now, this is very similar to the last few weeks, with the 2023 running weekly average being £356,927. Now, despite this bad news, let's be honest, it's not really that bad. These numbers aren't exactly terrifying. They're more what feel like normal market fluctuations. I think it's fair to say that the property market feels like it's just sitting at a bit of a standstill, with interest rates being the main driver behind the stalling. So if we are to believe that interest rates are the main driver, and we can make the assumption that interest rates are not going to start rising again, the question becomes, what are they going to do? Because even if people are getting used to the mortgage rates being where they are, that doesn't necessarily mean that they can afford them. Market experts are in fact expecting rates to start falling as early next year and be down to 4.5% by 2025. But the Bank of England can't start cutting rates until they are 100% sure that inflation is under control, which it currently appears to be. With inflation on a downward trend, the Bank of England does forecast it to fall to the government target of 2% by 2025. So, although inflation, which as we know is the main driver behind why we currently have higher interest rates, does appear to be under control, this doesn't mean they can just cut them. That could potentially cause a spike in consumer spending and send inflation right back up. As soon as inflation is back under control to a point where decreasing rates will not cause a spike in inflation, the Bank of England is likely to bring interest rates down. It's worth noting that inflation has actually fallen faster than originally expected. A year ago, inflation was at 11.1%. Currently, it's 4.6%. So personally, I don't think it's too unreasonable to expect rates to begin getting cut from the middle of next year, provided inflation continues to fall and stays under control. When that happens, I believe the property market will begin moving upwards once again. And if we see sub 4% interest rates, I fully expect the property market to just shoot up. Sub 4% interest rates will open the floodgates to buyers who have been unable to buy for the last few years. There is pent-up demand. People want to buy houses, and as soon as they believe they can, they will. And I don't know about you, but personally I would much rather be a property owner right now, holding through these tough times so that when the good times come, I can benefit. Well guys, that is all from me. I hope you found this video useful. If you did, remember to hit that like button and of course subscribe to the channel, and don't forget you can subscribe to my newsletter by the link in the description. Until next time, stay safe